There are so many brokers out there, all claiming to be market leaders, helping you achieve financial freedom with just a few clicks of a mouse. So which broker should you really choose? Here is a non-exhaustive list that you can use as a starting point to separate the boys from the men. But before you start, do yourself a favor and filter out all of the marketing BS you hear from the brokers. Things like your messages from your broker's business development manager about the latest promotion, or talk about all the broker awards that they have won. It is all marketing fluff. If you want to find out who the good brokers are, you need to do your own research. So let's get started. First, check your broker's regulation. Not all regulators are created equal. I have made a separate video on broker regulation, which I will link at the end of this video. In general, there are two tiers of broker regulators, the onshore regulators and the offshore ones. The onshore regulators include the CFTC from the USA, the FCA from the UK, as well as ASIC from Australia. These regulators are government funded and their mandate is to protect the public, which is why they limit leverages to no more than 50 to 1 or even 30 to 1 in some cases. And then you have the offshore guys like the regulators in Seychelles, Vanuatu, British Virgin Islands, Cayman Islands. Their mandate is to get foreign investment. They need foreign money. So they're basically paid to regulate their paymasters. So think of the implications of that. If you need higher leverages, for example 100 to 1, chances are you will have to be onboarded under one of these offshore regulators. Just make sure that your broker has at least one of the Tier 1 licenses. For example, Global Prime here is regulated both in Australia and Vanuatu. Chances are the broker has the same dealing team for both licenses, and having a Tier 1 license means your broker is able to conform to higher standards and likely has more capital in reserve, so they are less likely to go bust and are less likely to manipulate your trades in order to make more profit. And also don't take your broker's word for it. Check the regulator's registry of brokers and confirm that the broker is indeed regulated there. For example, for Seychelles, you can check the list of brokers with a security dealer's license. Also read your broker's client agreement and make sure that the company name mentioned here is indeed the company name mentioned in the agreement. Some scam brokers use a different company in the agreement or throw in a bunch of other companies as well. If you ever file a complaint with the regulator, good luck to you. Next, check out your broker's customer service. Nowadays, you should expect nothing less than 24/5 live chat. Ask a few sample questions in your preferred language. I've done this with a few brokers from China, for example asking them whom their regulator was, and some of them did not even understand what the word regulator means. If your broker can't give you an immediate response, make sure they follow up via email. Also look for your broker's complaint handling policy. This will usually contain the contact info of the regulator in case your broker chooses to ignore you. Number 3, look at the overall impression or culture that the broker gives you. What you really want is a no-frills broker whose main purpose is to allow you to transact with the market. If your broker resorts to high-pressure sales tactics or quietly encourages overtrading, it's probably best to run. Some red flags to look out for include things like having account managers who keep calling you with the latest promotion, or trying to entice you with crazy leverages like 1,000 to 1, or having trading giveaways that require crazy trading volumes, or having short-term discounts on trading commissions that are really meaningless in the long run. Why is this a potential problem? Because such brokers are extremely hungry for your money, and they hate winning traders. Most brokers who resort to such practices are also not very well funded, so if you happen to trade well, something might happen to your account. Next is to estimate your total transaction costs. This will include things like spread, slippage, commissions, and swaps. First, open a small account of say $500. For spreads, you can write a simple EA like the one here, which will record spread every minute, so you can get a good idea what average spread to expect throughout the trading day. I've left a link to a guide at the end of this video to show you how. For the other costs, I would recommend trading at least 20 to 30 times and recording your trades using my FX book or FX Blue, or you can just use your MT4 account history. Here you can find things like your swaps and your commissions. Make sure you normalize your swaps to a daily basis if your holding periods differ. For slippage, compare your intended execution price with the actual one over a sample of trades and get the average slippage. Sum up all of these costs over a sample of trades and find out what your transaction costs really are. The reason that I say this is because it is a common tactic for some brokers to reduce spreads and commissions and increase slippage and swaps to make up for these. Most traders only pay attention to the first two costs, and the brokers know this very well. And lastly, but perhaps most importantly, do a test deposit and withdrawal. Every broker claims to have lightning fast deposits and withdrawal with zero fees, so put them to the test. Your speed and your fees will of course depend on your deposit and withdrawal method, but nowadays even the slowest one should be completed within 3 working days. If you are charged higher than expected fees and your broker and your bank can't explain it, it's probably best to run for the hills. So don't trust the many broker review websites out there, because most of them have a sort of paying relationship with the brokers that they review. Do your own comparisons for multiple brokers and make your own decisions. There are so many brokers out there nowadays, so don't hesitate to jump ship at the first sign of trouble. To learn more about broker regulation, check the video at the top. To find out whether your broker is screwing you with spread widening, check the video at the bottom.